Time to rethink miners as a portfolio manager. While everyone is buying ETFs now, myself included, I'll be buying good companies soon. No, you are still very, very early. Don't cut profits. It's the only advice I give to those people that are right. Don't cut profits short after suffering for years.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning. I'm Vince Lanci, and this is the Goldfix Market Rundown. Today, as the screen suggests, we're going to be discussing miners, specifically my own thoughts on them and how I'm rethinking them as well. We'll also be discussing Bank of America report that we just sent out to subscribers on the second quarter earnings. Let's start with the markets themselves. 10-year yields are 430, unchanged offered. The dollar is 98.27, unchanged as well. The S&P 500 is 6407, down 7 and change. The VIX is 1579, up 21. Gold is on the highs, 33.32.67, close to the famous 33.33, up 17 after having been mixed during the evening, decidedly bid, turning at around, say, 6 in the morning. Silver, 37.18, was down a full percentage point. Now it's down a half percentage point. So gold is bringing silver higher. Copper is 439, down about a little less than a penny. WTI is up 64 at 63.41. Natural gas 273, down almost 2 cents. Bitcoin struggling, but still bid 113 spot 900, up a grand. Ethereum 42.17, up 141. Palladium, platinum 1118, 1323, up 8 and up 20. Interesting. It's kind of a gold, silver, stronger, but still below 90. This might be a good level. Grains, mixed, unchanged, with wheat up almost 4 cents. There's the front page. The story we'll be talking about will be the lower left-hand side. Bank of America mining highlights. That'll be the factual part of the presentation before I give you my thoughts on miners. And this morning we sent out a special gold message to all subscribers. We would encourage you to listen to that, or look at that, read that as a coming soon for what we're doing today, this week. Let's start with the main story. Precious metal stocks for Q2 on earnings rose. ETF inflows stayed positive, but gold slipped itself about 1.8% to 33.36 an ounce on tariff and inflation headlines. That's a Sunday recap of Bank of America's Precious Metals Weekly Report. So drilling down a little bit more into it, North American precious metals equities averaged 3.9% gain post Q2 results, led by SSR Mining, Kinross, and Pan American Silver, while Alamos and Centerra underperformed. Guidance shows sharp H2 production ramps needed at New Gold and B2 Gold, but Kinross and Newmont appear well positioned. July WGC data, moving to ETFs and investment demand, showed 23 tons of ETF inflows, slower than June, yet supportive of sentiment. Gold was down about 1.75% on the week. The full analysis, and it's very in depth, including upgrades and downgrades on miners, is in BOA's Mining Highlights premium post with upgrades and downgrades. That's a story. We'd encourage you to read that. And the timing of it, we got that on Sunday. And let's pop that little graphic up again, right? Let's make some use of it. We got that analysis on Sunday and had tip to our gift of that. And it came at a good time because we were in the process, we meaning me, I was in the process of rethinking miners, and it kind of cemented it. Bank of America's latest weekly precious metals report focused on earnings season, and it offered a sharp recap of the industry. It pushed me further to revisit a long-standing stance of mine whether to own miners again or not. Now, I began my career as a fundamental analyst, sitting at investor conferences and digging into management presentations. I was the guy who asked the questions that my boss. I was the bad cop for my boss and managing director. But after following high profile positions like Paulson and losing money in 2011, 2012, um, I sought to educate myself more. And then by 2018, after attending and paneling a metals and mining trade show, I think it was called Metals and Mining in New York, I walked away convinced that this is 2018, most management teams were weak. Now, I will share a lot of the ugliness that I wrote down back then with founders. I still have the notes. It's like one of those, what do you call it? Phone notes, the yellow things. I will share that, and I had to review that before I rethought. Is it still true? Anyway, I wrote notes to myself that miners were, quote, a waste of time except for streamers, and I stepped away. And that was true for a long period of time. So the money I didn't lose, so to speak. But however, that view is seriously shifting. Using ETFs as a stand-in for stock selection, which is what I do right now, has its limits. You buy the winners and the losers together. You get all the bad baseball players in with the Derek Jeter card. So maybe the ETF gives you what, 4%, 3.9% this quarter. But inside the basket is a company up 50% because management is strong. And we're ready for that. The smart money buys those miners, actually, in my world, and shorts the ETFs. Buy the good management, and you sell the index against it because you don't want the garbage. And that's how you hedge your risk. But I'm not suggesting you do that. I know most of you that are, I'm speaking to three tiers of people here. For the people that have owned miners forever, yeah, you're ahead of the curve on me on this, right? For the people that are like me, the people that are like me are institutional fund managers that are just waking up to miners, right? So I'm in that category, right? And then below that, you have regular educated retail investors that are thinking about miners. So I'm addressing all three tiers right now. The top tier, don't sell. The middle tier, I'll get into that right now. And the bottom tier, buy ETFs. So here we go. The moment has come to separate solid companies from the rest. Banks are already rewarding disciplined miners by backing them. You can be sure that they're not buying the ones that are not running themselves properly. For many of you, that moment has already come, the hardcore mining crew. Consider my opinion to be behind the curve. I can live with that. But ahead of the rest of the world. Anyway, time to rethink miners as a portfolio manager. While everyone is buying ETFs now, myself included, I'll be buying good companies soon. No, you are still very, very early. Don't cut profits. It's the only advice I give to those people that are right. Don't cut profits short after suffering for years. As a trader once told me, um, diversification is a surrogate for stock selection. This is when I was on the equity side. And he was quoting someone else. But basically, diversification is a substitute for doing the work. And that advice still holds. And it comes back in. And I have to tell you, I went back and read what I wrote. And two things struck me. Like, I was really pissed at the way they presented to me. I have some details in there. There's a guy who talks about silver and lithium, uh, and I just walked away feeling really slimed. But that was, 7 years ago, and well, it's going to be 7 years of feast now that we've had 7 years of famine. So anyway, for newcomers, ETFs remain fine as an entry point, but for me and for those willing to do the work, the time has come to rethink miners and to reward the ones who deserve it. I'll be sharing those old notes again from 2018 with founders later today. It's kind of interesting and how things have come full circle. Anyway, I don't have any soundbite to say except you're still ahead of the curve if you own miners for like the last 10 years, right? Or let's say you were early when you were losing money, now you're making money. And Bank of America is talking about miners more. Goldman Sachs has a tremendous report out on gold in general. Banks are putting out primers. Citibank is talking about how miners should hedge further out on the curve. It's all adding up to smart banks looking at miners. They see the miners. They don't hate the miners. It's just it wasn't their time yet. They see the miners and they go, well run, well run, well run. Takes our advice and hedges, takes our advice and buys shares back, takes our advice and gives dividends. Buy them, buy them, buy them. And all the ones that don't do that, they're not buying. And all the ones that don't do that won't get recommended to the normies. Sometimes the banks do the right thing. And this might be one of those times. Anyway, it's time. Their time may have come. And I just wanted to share that with you all. Related post, the end of free market capitalism and U.S. debt for equity swap. That's a drill down, a more elaborate think piece on Scott Bessent's recent comments about how other people want to invest in the U.S., something that we were ahead of the curve on. And now I'd say we're on the curve. Special gold message to all subscribers. We just sent that out. Founder special. You know what that is. Nixon and the end of free markets and the von Grey's post, the beginning of the end for U.S. dollar hegemony. Coming soon, as I said, take a look at that. Listen to that. You'll know what's coming soon. We have 3 reports coming out this week. One was just sent out. A breakdown of the Bank of America weekly. We have a report from ANZ, which was really tremendous. But now, in light of the third one, which will probably come out tomorrow, uh, uh, the Goldman Sachs primer. And we know who they're talking to with this report, and it's phenomenal for that reason. It's going to be must read. It's just must read. It just is. All right. So anyway, next, data on deck, housing, Jackson Hole, and the community chat, which is self-sustaining now. I haven't really put as much in there as I want to. I've been busy with these reports, but some really smart guys in there talking about miners and metals as well. So check that out if you can. Let's go to the markets. The last couple of days have been really rough, right? So gold was down. Right? Why was gold down? Why was silver down? Well, stocks were down too. So maybe people were getting a little bit nervous about Jackson Hole. I think you're seeing some gyrations from Jackson Hole. Maybe there's peace dividend weighing on gold a little bit. I don't know. But it's hard for me to, you don't have to have an opinion on everything, you know? And so it's hard for me to have an opinion on what's going on right now. But I will say that, you know, I note that there is pushback, you know, where I was saying for a while, silver shorts are being covered, gold's being unwound, platinum, palladium are kind of doing their thing back and forth internally. Well, somebody's stepping in and going the other way. Maybe this is a peak. Maybe this is a clue that there's another tariff event coming. I don't know. I know how it ends. I just don't know when it ends. It ends with silver at $42. I just don't know when it ends. But, you know, yesterday, Trump made a comment like, we need to own more copper. We need to produce more copper. We need it. And copper didn't go up. So as a trader, I'm like, oh, that's bearish. If he said that and copper didn't go up, that's bearish. But and it is bearish. But backing out to what he's saying what we've already known, and that is too much scrap has been sold to China. We need to secure our copper. Look, if you want those AI stocks to keep going up, you need to have copper wire hung. You need to have electricity. And you don't think silver's part of that? Of course it is. Anyway, chart, there it is. Gold's in the middle of the range. I don't make more of it than what it is. I'll do a quick checkup on silver after yesterday's deluge. Let's see if there's anything material to worry about here. I think there's a trend line. Yeah, there it is. There's that trend line. All right, so let's kind of draw that trend line here. You can draw it here. Okay. There you go. All right. So we got a trend line and we got a 50-day moving average here. And silver's been bought on the trend line. 1, 2, I wouldn't say it was bought here, just held here. It was bought on a pullback to the trend line twice. So Speculatively speaking, you'd be long silver and long gold the rest of the day. But you would also keep in mind that while this is technical buying on a trend line, on a trend line that's also running with a moving average, there's a lot of noise between now and Jackson Hole. Jackson Hole could be really important this year. So that's it. I'm Vince. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.